Nigeria's inflation rate has defied all monetary policy of the Central Bank of Nigeria, hitting its 70-year high of 22.41% for the month of May 2023. Now, the latest Consumer Price Index report released by the National Bureau of Statistics shows a fifth consecutive rise, indicating an increase of 0.19 percentage points when compared to that of April 2023. Now, aggressive monetary policy tightening by the Central Bank of Nigeria, which has pushed the monetary policy rate, that's MPR, from 18% to 18.5% to curtail rising inflation, is said to have repulled the stock market off some gains as market capitalization's equity depreciated by 430 billion naira on Thursday. Let me start with Charles. Charles, how does this development comes to you, and what is the ripple effect of this on capital market activities?
Yes, thank you very much, Blessed. You will see that it is still the same thing we are talking about. Inflation rate is rising. And of course, we know that the reason is because of subsidy removal. Prices of food, services will go up. Inflation rate is up. Now, if you have a CBN governor or the MPC meeting and they are hawkish about this rate, then that means you are going to increase the rate again, maybe by another 50 basis points or 100 basis points. Again, for me, that method is not what I would want to advocate. But yes, inflation rates affecting the capital market is very obvious. But the investors have to look at the yield. And the capital market, especially the equities market, is one asset class that can most of the time beat inflation. For those who are investing in the fixed income space, of course, once inflation is going up, they are also losing value. But for the equity space, yes, once a company performs so well, that can, meet up with inflation. However, there are asset class I will advise investors to invest for them to be able to take care of inflation. Yes, inflation will continue to rise. Real estate investment trusts, they can invest in those areas for them to contain or minimize the impact of inflation on their investment. Real estate investment is also good. Even investing in commodities, gold especially, they can invest in gold to kind of mitigate the impact of rising inflation on their investment. So for investors, just need to continue to diversify their portfolio, invest in companies that are producing goods and services that their demand is inelastic, that no matter how the price will increase, investors and yes, consumers will still want to buy them. However, like Abdul said in the studio, there is a level you will increase the price of your goods and services because of the purchasing power of the average Nigeria is already down. It will be difficult for them to purchase the same amount of quantity, even as at now. The same amount of commodities they purchase will be reduced because of the rising inflation, because the money, the cash they have, you have 100,000 naira with this inflation over 22 yes, over 20%, you are talking of less than 80,000 naira as your real money that you are having. So investors will now need to look at this inflation rate and say, these are the sectors I want to invest, and I've advised the sectors should be telecom sector. The telecom sector is key. Then of course the industrial sector is also key. This is in the equities market, while they can also invest in the real estate market. All this is done to curb the rising impact of inflation on their investments.
All right, thank you for your submission there. But we'll wrap up this segment now with Vincent's submission. Vincent, inflation is skyrocketing. The removal of fuel subsidy has not really shapen the outlook of inflation, as many analysts say that the June inflation rate, which will be coming out by next month, will see inflation also skyrocketing. Now, as it stands now, looking at it from the capital market perspective, of course, investors really react to inflation, the impact of inflation to markets. Now, if we continue to have a continuous increase of inflation at double digits, what does this speak to the well-being of the capital market? And then again, what other measures should the monetary policies be putting in place to tame inflation without raising MPR?
Yes, thank you very much. The increase in inflation for me, like others, is not really surprising, because when you look at the figures, the factors that is driving up inflation, we have not really done much about them. So that's why all effort by the CBN to keep increasing rates have not actually been able to tame inflation. Because when you look at the major driver, food inflation is a major driver of the inflation figure. And what is causing this? The level of insecurity in the north has actually really affected food production, especially in the north, especially in the middle belt being the food basket of the country. So a lot of farmers have left the farm. And also talking about the floods we had last year, and the fact that we have not really seen the policy to actually boost the agricultural sector. These some of the things that have affected the movement of these commodities from the farm to the urban areas. Those are some of the things that we have not really seen effort in tackling this issue. So we continue to see a rise in food inflation and also affecting other the headline inflation figures. So we expect that, for me, I think that if steps are taken, this, like you mentioned, the inflation for June will definitely be higher with the increase in the price of fuel, and it's expected that it will continue with this current unification of the exchange rate. But if steps are being taken to cushion the effect on the average Nigerian prices, I think that will help in stemming the inflation to some extent, but definitely will not reduce it, remove it. Then with respect to the impact to have on the equities market, definitely as we're going to see a rise in inflation, and if there's an increase in rates, it's expected that we'll see transfer of investment. People will start moving funds from the equities market to the fixed income market. But what we have noticed is that though inflation keeps rising, we have not seen an increase in rates. So I think that will be also things that people will be looking at. I mean, we may not really see that transition in droves like we saw last year when the government started increasing rates at every MPC meeting. So we saw a lot of movement. So starting from May last year. So if they don't continue to see an increase in the monetary policy rate, we may not see movement, that kind of movement. Like Ambrose mentioned earlier on, that we are watching what will happen in the July MPC meeting. So I think those are the things that people will be looking at. If there's an increase in rate, definitely there'll be a movement. We will see an increase in rates, we may not experience those kind of movement. And also, if government takes steps in, because most of the things that are pushing up the inflation is things that the fiscal authorities need to do something, not really the monetary authorities. So I think if we start seeing steps by the new government, by the appointees on those measures, things we have talked about, we may see inflation we increase, but not as expected, and also we start stemming down as we see more implementation of their policies.